Many of you who had been working on implementation projects would at some or the other point have configured document splitting. Of course, there is no organization without using document splitting. And with this configuration, you would also have encountered something called as a zero balance splitting. So many companies do use zero balance splitting, and of course, there are a lot of advantages of using zero balancing. But do we really require zero balance splitting? Is there any disadvantage of having zero balance splitting configured in the environment? So that is what we are going to understand in this video. Hey there, welcome to another video on the channel. Hope you are finding the videos useful. Please do not forget to like, share and subscribe to the channel. Now you can contribute to our work by joining the channel and get member exclusive products like coupons, exclusive video series, etc. You can do a one-time contribution by clicking on Super Thanks button. So let's get started. And one last thing, there is a new upcoming batch on SAP S4HANA project systems, which is curated for FICO consultants, and it is going to start on 21st of December. So if you haven't registered yet, scan this QR or click on the link in the description and register it now. So here we are back to SAP. First, let us try to understand how a document with zero balance splitting looks like. So first I'll go to the transaction code FB50. So here I'm just posting a document which is nothing but transfer of balance from one profit center to another profit center. I'm using two balance sheet accounts. I'm just taking two random balance sheet accounts. These are my asset 1 and asset 5 accounts. So I'll create one and I'll debit one with the same amount. So let us double click this, and here I am going to enter a profit center. I'll say my profit center is common. Done. And for the second line item as well, I am going to enter the profit center as common. Now the document looks perfectly fine. The debits and credits are matching, and every balance sheet line item has a cost object or a profit center assigned to that. So from a document posting point of view, this looks perfect. So let us simulate this. It's as expected. We are crediting one GL account and we are debiting one GL account, and both of these have the same profit center what we have assigned. So there is one more option to simulate it in a better way. It is simulate general ledger. So in this simulate general ledger, we can see the general ledger view of the document. So here you see there are a few more details and it is a bit modern interface as well. So we are debiting one GL account and creating another GL account. Same amount, local currency. This is a different currency, and we are having same profit center assigned to both of this. This is a very normal document. So maybe even if I save this, the document will very much look the same. So let us display this document, and it is very much the same. Even if I go to the general ledger view, it is same as what we have entered. So this is a scenario where there is no zero balance splitting. So now we'll post another document. So I'll say it as test 0. And here again, I'm using the same GL accounts. One is debit, one is credit, and I'm using the same amount as well. But this time, I will just add a different profit center to each line item. So here I have added common, and in the second line item, I am adding the profit center as E. Now I'll go back and simulate this document. Pretty much the same like what we have posted earlier. We're having one GL account debit, another GL account credit, having two different profit centers. Perfect. And the document is also in green, so it is ready to post. But we will just simulate the general ledger before that. So now you see there are two more line items that have happened. So this is what the expected one, like the previous document. Same thing, we are having different profit centers, but the system had automatically posted these two line items, and these are coming from the zero balance splitting configuration. So I'll post this, and maybe we'll take a step back and we'll understand why did the system actually post And why do we actually require this zero balance document? So for that, we'll come back to Excel and we will just understand the basics of zero balance splitting, or rather the basic fundamental idea behind having document splitting enabled. And what is the fundamental reason? Why do we require document splitting? We require document splitting because at every cost object, which is also called as a characteristic, at every characteristic level, we want the debits and credits to be zero. So typically when we post an FI document, the total debits and total credits will be zero obviously at a document level, but it does not mean that at every characteristic level, that can be a profit center or that can be a segment. But in this case, we will take profit center as our characteristic. So at every profit center level, it is not necessary that the whole document will become zero. Classic case is the document that we have posted now. So if we see here, at this profit center, there is a credit of 100 and at this profit center, there is a debit of 100. So if I put a subtotal here, at common it is minus 100 and it is EV it is 100. That means at a profit center level, the balances are not matching to zero. So how to do it then? So what is the purpose? So the purpose of document splitting is to ensure that the balances, debits plus credits, are zero at every characteristic level. Now the characteristic can be profit center or it can be any segment, or in some cases it can also be a business area. All this depends upon the configuration that we have done in document splitting. So it is under financial accounting, general ledger accounting, business transactions, document splitting, and here we have defined document splitting characteristics for GL accounting. So here we see these are the three different characteristics what SAP had given, but we can always add other characteristics which are available. Now if we want to have a new field here, you need to change some structures in the background, etc. But these three are the default characteristics what SAP gives. So in the system, out of these three, we are using profit center and segment. So here we have this checkbox of zero balance. So whether or not zero balance is active or not. So now it is active and that is the reason system had posted the additional two line items in our previous document. So why did the system post it? Because obviously when we have seen that at profit center 1, or maybe I'll say common profit center, the balance is only credit, right? It is minus 100, and at EV profit center the balance is plus 100. So now in order to make balance zero at every profit center, I need to have common profit center of plus 100 and EV of minus 100. So only then at every individual profit center, the total balance is going to be zero. But how can we get this impact without having any impact on financial accounting? Because we don't want to have additional entries in our financial accounting, because that is against the financial document principles or our accounting principles. In fact, it is not even accepted by the auditors. So we don't want to hamper with our transactional data. That means we really don't want to have any impact on the financial transaction, but we still want to have at a controlling level. That means at a profit center level, we want to have the balances zero. So the best way to do it is take some random dummy GL account or a contra GL account. In this case, we are calling it as a zero balance GL account. So it is a balance sheet account. So zero balance GL. So this zero balance GL, I am going to debit and here I am going to credit. So from an FI point of view, if you see, there is one dummy GL that is being used. This GL account is not shown in any of our reports and there is no net impact of any posting that is happening on this GL, because at a GL account level, the debits and credits are zero. So there is no impact at a financial accounting, that means a GL account level, but only from a controlling point of view, we are having a net impact where we have made the balances at every controlling object or profit center level to 0. So now there might be a question like, why are we only worried about an impact on FI? By adding these two line items, is there no impact on controlling? Yes, it is. The balance at every profit center level for this document is becoming 0, and that is the impact, and that is the impact that we even want. Now the question comes, why do we need that impact? Because when we try to extract reports at a profit center level, most likely, many companies are now using profit centers, but some companies are still using business areas or segments. So wherever you extract these reports, like it might be at a segment level or a profit center level or a business area level, overall you are looking at a profitability of an division, of a particular division in your organization, or at an entire segment level or a department level. So depending upon at what level are you trying to extract the report, you might be using business areas or you might be using profit centers, etc. So at this level, if you're extracting a report, you should have total balances, debits and credits matching so that you can extract a proper balance sheet report out of it, right? So that is the reason we want this impact to be done by using zero balance GL. So this is the purpose of zero balance. So that is the reason if you go back to SAP, we see that the document that we have posted is having two additional line items, and that is visible only in general ledger view, because as I said, this is entry view is purely from a FI point of view, and we don't want to change anything on the FI side. So that is the reason these are the only two line items. But GL view is also a view which is having controlling also into picture. So from a controlling point of view, we are having two additional line items. Now, if you see at every profit center subtotal, the balance is 0. The subtotal is 0. So this is how zero balance works. Now, we'll see a little bit into the configuration of how to enable zero balancing and what happens if I do not enable zero balance. So this is one thing. At a characteristic level, we need to tell at what level the document should be zero balanced. So if I remove this, if you see here, there is also a field for segment. If not, let me add it. So this segment, we'll add it here. And at this segment level, as well, the total balance will become 0, obviously, because segment is derived from profit center, and here we are having different profit centers assigned to different segments. So at a segment level also the balance is 0, whereas if you go to the entry view, at a segment level as well you will have a different balance. The debits and credits are not summing up to 0 here. So even at a segment level, we have enabled zero balance. Depending upon the company, they might enable only at a profit center level or only at segment or both. Now, the other configuration part that we need to see is define zero balance clearing account. So we need to tell the system what is the zero balance GL account that the system should consider when it faces such scenario. So this is one part. So here we are having this accounts. So I'll give my charts of account, and under this is the GL account that I have assigned here. This is a pure balance sheet GL account, and I have enabled post automatically only in FS00, and I'm having G001 or the standard field status group so that all types of cost objects are allowed on this one. So that is the only configuration that we actually need to do to enable zero balance spreading. Now we'll do one thing. I'll go back. We'll remove the zero balance checkbox here. I'm removing at both levels. And now let us try to repost the very same document what we have done now. So we'll go to FB50. It takes a bit time now because we have changed the document splitting settings. So in the background, system is going to verify all these configurations, etc. because we are running the transaction code for the first time after making document splitting settings. And that is the reason document splitting configurations are not recommended to change once you already have the transactional data posted. And document splitting is enabled at a whole client level. So it is better to be careful before we actually activate it, and after that it is difficult to change it. So I'm having very same GL accounts, credit, debit, and same amount, and double click this to add the profit center. More, and one is common, or maybe this one is EV, and for the next one I'm going to add it as common. And now go back and save it. Document is posted. Now we'll display this, and if you go to the general ledger view, same thing. So that means we are not making the balance at every cost object or profit center to zero. So what we need to understand from this is zero balancing is not a mandatory configuration for document splitting. Yes, there are certain scenarios where zero balance will give us a better output in terms of reporting at every profit center level or a segment level, but it ultimately rests upon the decision of how the accounting department of the client is deciding, or how the management reporting department of the client has decided to use the reports. So if they do not want the balances to be zero at every profit center level, then zero balancing should not be active. And if you want the balances to be zero, obviously we need to enable the zero balance. So that is a, there is no fundamental rule behind this. It is just that how they want to extract their reports. Now, is there a disadvantage if we enable this? The answer is again no. There is no negative impact by enabling or disabling zero balance. It ultimately depends upon the call of the IT heads or your client on how they want to extract the statements or reports at a profit center level or any other characteristic level. So if you want the balance to be zeroed out at every characteristic, then enable zero balancing. If not, it is not mandatory to enable. That's it for this video, and see you in the next one. And you know that you can contribute now by clicking on join button or super thanks.